What's going on, everyone? We hope you had a great weekend and are ready for an exciting week in the markets. On Friday, 87% of the S&P 500 popped up in the green, and in today's video, we're going to be covering what's next for markets, where the money's at, what you need to know with the tariff trade war situation disaster, as well as how earnings season is back in action, and we even have a Powell speech this week. So we have a lot to cover in today's video. Gold is blasting past record highs, and we are seeing some pretty strong, clean moves in certain areas of the market. We're going to cover everything you need to know in today's video. So besides that, Tom, let's get right to it.
Yeah, on Friday, the market had a pretty good pop back to the upside, rising up 1.78% there. That was really good compared to that drop-off we saw on Thursday. And last week, we saw the SPY have a great move. You know, that move on Wednesday was fantastic. Obviously, Trump came out with a little bit of tariff relief, and we saw the market react very positively to that. We've been looking at data off of that reaction. I know last week we were looking at data that kind of showed Thursday would go down a little bit, and then Friday, we generally do see like a little pop back up after this. We do have some more data here coming in off of that crazy gain with the S&P. So whenever the S&P has a 5% gain or higher, what happens next, right? And over the next 5 days, this is the data set that I'm really keeping my eyes on here, where we're only green 39.1% of the time. So obviously the market does go down quite a bit over the next 5 days following a pop like that. So that's something to really keep in mind for the next couple trading days. And it does worry me that, you know, as we start to look at the SPY and we just look at like that great pop from last week, that, you know, we might not be able to get back above that high.
Yeah, and as we look at the market right now, we know we are in a crazy situation in multiple different ways, shapes, and forms. The big thing that I like about the market right now is that ever since Trump came out with the tariff pause and basically showed signs of slowing down his his tempo in the short term, that is what really, shifted things more towards the bull side. And I think Trump is, given that he is like the biggest risk to the market right now, because whenever he comes out in the middle of the day and says something crazy, unexpected, and, something that can have severe economic consequences, it scares a lot of people, it sparks uncertainty, and it's not a great sign to see. But what we have been seeing over the past few days is he is becoming more flexible, which the market loves. So, the way I interpret that is that, some of our downside, like major, like crash risk has been falling, but that doesn't mean the market is completely out of the woods just yet. Like you showed by looking at that data, historically speaking, 5 days after we see a mega, pop in the S&P 500, we still do have a little bit of turbulence, which is certainly worth noting, especially given the market situation we're in.
Yeah, definitely. And every market situation is going to be different as well. And, there could be news that comes out, like let's say today or tonight or tomorrow, that definitely gets the market to go more green. And who knows, maybe we go against the data and end up green after 5 days. But I definitely like going back and looking at this and, looking at the couple moves following that big green day last week. We did hit it on the head pretty well. There's usually a pretty good pullback following a day like that. And I do like that data that showed some nice green movement on Friday as well. But I know that Trump is actually talking about exempting chips and electronics from these tariffs, which is insane. So like you talked about, there's been a big shift with Trump, and he's been kind of getting more lax, we'll say, on the tariffs. And it came out that he's looking to exempt phones, computers, chips from these tariffs, and companies like Apple, Nvidia, Dell, and many others that obviously deal with electronics that need to import parts and stuff. This is going to be a big relief for them. But I will say there is a little bit of a catch here. Lutnick did come out this morning, and he did say that there will be separate tariffs coming out, and they may be imposed like in a month or so. So that might be a little bit of a letdown on that exemption news, but I'm expecting this to maybe spur some more positivity into some of these tech stocks here.
Yeah, and it's certainly good news for Apple, because when you have over 80% of iPads made in China, more than half of Macs made in China, nearly 87% of iPhones made in China, when you have a major conflict between the US and China, that brings a big risk, to you and many other companies. So, it definitely is good to see, this, calming with Trump. It certainly helps in many different ways. And what I think is very interesting right now is that while you could say the tariff slash trade war situation is calming down a little bit, we still do have some major, like, longer term problems with China because Trump certainly isn't backing down with them, and China isn't, you could say, backing off either. They increased their tariffs on us to 125% now. Our tariffs on them are at 145%, but China's like also saying like they're not backing down. They came out this weekend and said that the U.S. tariff exemption is just a small step to correct wrongdoing. So, like, that's like a bold statement. And I do see some risk in, like, the longer term if we can't come to an agreement here because, like our traders back from 2018, remember, when we did have that extended trade war with China, the market took quite the beating.
Yeah, it really did. Like scrolling back to 2018, around that time, there were those rumors with China or like where Trump started to really talk about it in the beginning that got the market turbulent. And then once the tariffs started to really hit, we had a really massive drop out of the market. And one thing to keep in mind is that pullback back then was actually pretty big, right? But it was another 20% pullback, almost exactly like what we're seeing right now. Like if we go to the SPY, we go to the recent high and we go to the recent low, it's right around 20%, just over it, like 21.3, 21.4%, somewhere right around there. So very interesting. It's almost like the same amount of pullback as well here, and we're starting to get this little bounce back as Trump's being a little bit more lax here. But I'm definitely still worried about China, Mike, and I'm really keeping my eyes also on the China stocks, like BABA and others. If we start to see, like, let's say them come to an agreement and come to a good deal, we could maybe see like a good pop back out of some of these China stocks, which could be a great situation. But at the end of the day, they have to get a deal done.
Exactly. Yeah. Egos have to be put aside and a deal has to get done. But as of how it stands right now, that doesn't look too likely in the short term, which is why for me personally with the S&P 500, I'm not loving this price action. SPY is in a situation right now where, yes, it had a great past few days, but when you zoom out, like the longer term momentum is still pretty skewed towards the bear side. As we already mentioned a handful of times, the historical statistics, point towards a slightly red next couple of days, but at the same time, like it's not like overwhelmingly red, is because 39% of the time, the market does still pop up in the green. So for that reason, I don't see like a ton of opportunity trading specifically the S&P 500 right now. I think more of the easier money is made is where there are stronger imbalances of buying and selling. And one of those places right now is gold. For those of you who've been watching the channel for some time, know we've been mentioning gold for months at this point, and it is continuing to soar. Gold is at over $3,200 an ounce right now, and this uptrend is getting pretty parabolic, Tom.
It definitely is, and I think that on Friday, and part of what fueled gold last week was maybe some more of these China comments. China's striking back, obviously. We saw that. That's not good, and there's still a ton of uncertainty out there. Whether you look at the China situation or not, there's uncertainty across multiple different aspects. Even Russia and Ukraine, you still have stuff in the Middle East, so there's definitely a lot of stuff going on, and traders are definitely fearful right now, and I really like looking at the gold chart, even GLD, and seeing how good of a pop we're getting. I can't believe I'm saying this based on where GLD opened up in 2025, but it's almost a $300 a share. Like if we look at GLD, it had a good day on its first day of 2025, but to where it is now, that's like a 22% increase. That's pretty awesome, almost counteracting this whole entire drop out of the market.
Yeah, if you've had gold exposure this year, it's definitely been a good year for you. And there are multiple ways to play this. You have GLD, which is like the easiest way to follow gold, but you also have GDX, which follows gold mining companies. You have tickers like GOLD, NEM, AEM, and so many others that are individual gold mining companies. And for those of you who might not even want to play gold, but a similar metal, SLV, that also has some pretty good moves as well. You could check out this ticker that has been rebounding pretty strongly. It hasn't been as strong as gold, but silver definitely does have the potential to move pretty well. So definitely keep it on watch. And as we look at gold, silver, and just precious metals, like yes, they are moving moving in a much stronger and cleaner way because people all around the world right now are scared and they're uncertain and they want to deploy their money somewhere to get a return, but they don't feel all that great in the stock market. They don't feel all that great in the bond market either. So really, precious metals is, one of the few places where, people are like truly flocking into. So definitely keep these on watch. This doesn't mean, of course, that they have to rise every single day. There will be pullbacks sprinkled in, but this is where the action's been at.
Yeah, it's been really awesome just to see the overall uptrend here. So I'll definitely keep these in mind over the next few trading days and even the next few weeks as we start to see more tariff news come out and more uncertainty continue to hit the market. But there is more earnings coming up this week, Mike. Earnings season, as we talked about, kicked off last week. And this week we have even more banks. Goldman on Monday in pre-market, Bank of America and Citigroup on Tuesday in pre-market, Johnson & Johnson even there, United Airlines on Tuesday, ASML on Wednesday, but Thursdays where things get fun. We're going to have Taiwan Semiconductors and Netflix both report that day. Those are going to be two huge reports. I'm sure with Netflix, everybody's going to be looking at that subscriber growth, of course, and of course, revenue, obviously, but Taiwan Semiconductors will be huge as well with all the tariffs and everything going on.
Yeah, I am so excited for this earnings season. Not only will it add more volatility to the already crazy market, but I think it's going to say a lot on how companies guide their forward earnings and just what they have to say about this economic situation. And I think it's going to give us a lot more information as to what companies might be set to be affected like worse than others, which will definitely be very interesting and result in some pretty strong, clean moves. So that'll be pretty exciting. Like you said, earnings season is already upon us, and as the weeks go by, we're only going to get bigger and bigger companies set to report, especially like these big tech stocks. So good stuff there. But Tom, we also have the big man, Jerome Powell, coming back this week.
Yeah, we definitely do. On Wednesday, he's going to be giving another economic outlook at a discussion again. Now, this time it's going to be at the Economic Club of Chicago in Chicago, Illinois. So definitely be ready for that. 1:30 p.m. Eastern time on Wednesday. Anytime Powell talks, it's definitely a huge thing to look out for. And of course, any economic outlooks are definitely huge. And I know recently whenever he spoke, people have definitely had their eyes on him. So be ready for that on Wednesday. And then looking at the economic schedule for the week, we have retail sales on Wednesday. That's going to be pretty big. On Thursday, we have building permits and housing starts, and that's pretty much it for the week. So I'm pretty happy with the overall rundown, and I think the main thing to watch for is really going to be the retail sales Wednesday and then Jerome Powell on Wednesday as well.
All right, sounds great. Well, Tom, as we look at SPY, what are the key levels and analysis to look at for the charts this week? It's certainly in an interesting situation where we had that biggest green day since World War II, or at least the third largest one, I should say, on Wednesday. We pulled back a little bit on Thursday. SPY's trying to recover a bit. What are you seeing on the charts?
Yeah, right now I really like that high from last week where that green day was, which is like right around 547. If we end up getting a really good breakout past there, I think that would be a great sign. I'm definitely going to start to lean way more to the bull side if we end up getting that breakout to occur. There is a huge resistance as well intraday from last week, right around 540. So that's going to be another level to keep on the radar. There was some pretty good intraday reactions there. On Wednesday, and then even in pre-market on Thursday, rejected down there again. So that ended up also being pretty close to the high of day from Friday. So like if we get a really good breakout past 540, I'll be looking for that gap to fill up to like that 547 level that we talked about earlier. I'm sure a lot of people are watching that gap from from Wednesday into Thursday there. That's going to be a very, very big thing to watch for. If we fill the gap, that'll be kind of where I like to see more of a bull run start to occur. But these are some major resistances. And as far as key support on Friday, I thought that hold of 520 was fantastic. And that's going to be the main area of support that I watch out for next week.
Yeah, 520 in a perfect world that this would hold, but if it does break and then SPY ends up breaking through that 510 area, that would be a horrible sign in my opinion, and can certainly you could say reignite the just like feedback loop of just like panic and fear and increased short selling and margin calls and all of that, which just contributes to massive selling in the market. So 510 is like the biggest risk this week in my opinion, where like in in the best case scenario, the S&P 500 gets back above that like 547, 548 area and potentially breaks through it. It will take a lot for that to happen, but it is certainly possible. But again, the market will have a lot of work to do for that to happen. Again, I don't think the cleanest movement is with the S&P 500 right now, but rather in other areas of the market, whether it be precious metals, maybe bonds with TLT, and even individual stocks. So keep that in mind, but it should be a fun week nonetheless. And besides that, Tom, let's get right to some setups and predictions. A stock that is close on watch right now is AMD, and it is to the upside. AMD has definitely been a stock that has been struggling a little bit over the past year, but it has been holding up relatively well with this recent sell-off. It is still below the $100 resistance level, which does hurt a little bit, but it definitely does offer a lot of room up to that point. Right now, it's at $93.50. It's making higher lows, which is great to see. It's putting good pressure on its intraday highs, and it has a similar chart setup to the S&P 500, where it had a massive day on Wednesday, and it is in the process of getting closer to retesting those highs. As I look at AMD right now, the more pressure that this can put on its high, the better and stronger the the bullish setup will become. On Friday, this moved up by over 5%, which was great to see. And let's say, this sort of momentum continues. If AMD can continue to, put strong pressure on its intraday highs and maybe, start the week off up 3 or 4%, that will not only show the stock on a lot of traders' radars, but it'll also, spark some more short covering and, bullish actions in many different senses, whether it be with individual traders, maybe market maker hedging, or anything else. AMD is definitely a stock that's on my bullish radar, but it's also worth acknowledging and understanding that, this stock will likely move with the rest of the market. So if the S&P 500 is tanking tomorrow, then you don't want to fight that momentum. If the market starts gapping down, then you can't just attach yourself to the AMD or any other stock's bull side.
Yeah, definitely not. If the market starts to, let's say, tank off, I'm definitely going to adapt. And that's definitely what traders need to be doing in the short term here with how crazy everything is. It seems like every day we're getting a different type of move coming in. There's not really any good overall direction, but hopefully we start to see that shift in the short term. With my first setup, I'm looking at Take-Two Interactive, TTWO. For those of you that don't know, TTWO is the company that's making Grand Theft Auto 6. So pretty big game. I know this game's been getting a lot of hype. There's been some new trailers coming out recently and other things of that nature. I really love the daily chart setup on TTWO, and I do like the potential for maybe a swing for a break of this recent high. I really like this 218 to 220 resistance up here, and I could see TTWO breaking out above it on this setup. I love the way recently how it ran down and bounced off of key support, and we're now getting a great comeback. I've looked at this daily setup a lot on a lot of different stocks, and I've noticed that a lot of times I will notice that it does break that high in this type of way. So I am watching for that with TTWO over the next few trading days and few weeks. It could maybe be even a good swing opportunity to the upside, but I've noticed that this stock has been getting a lot more hype with it in the short term.
All right, sounds good there, and it definitely had a pretty good day on Friday, which is good to see. So I also keep it close on watch. Another stock that is certainly on the radar is GDX, and again, it is to the upside. I know we hit on gold quite a bit already in this video. This ETF follows gold mining companies, and they've actually had more momentum than gold itself in the short term. While GDX is definitely on my bullish radar, it's worth acknowledging that over the past few days, it is up a ton. So don't expect that the stock just has to keep flying to the upside in the way that it has. It would not be that surprising if we did see a pullback, but the thing is that no one knows when that pullback is going to happen. So with strong moving, momentum-driven setups like this one, you have to have a stop loss. If you enter a strong moving setup like GDX and you just plan on holding if it works against you, you are going to get ran over. So you have to have a stop loss, especially with a momentum-driven setup like this one. Keep that in mind. If a setup is not working in your favor, the worst thing you could possibly do is just hold and hope.
Yeah, holding and hoping is definitely the worst thing you could possibly do. I agree, Mike. We see that happen all too often as well in the options market. Just understand how options move and how they decay as well. But with my next setup, I'm looking at Nvidia in the short term. I am looking at them to the upside. I was looking at them to the upside last week as well. I liked how they had this downtrend from that high of Wednesday into Thursday. And on Friday, they started really moving above there and breaking out well. And they even broke above 110. And at the end of day, held that as key support. Considering that we had good news coming out with, like, let's say Trump's exemptions on some of these electronics and chips and different things like that, that could end up really helping Nvidia, and we might see some good buying pressure out of Nvidia, Apple, and maybe a few of these beaten down tech stocks in the short term. So I am watching for this with Nvidia. If I see a break above 111.50 to 112, I'll be watching for that move up towards 115. I think 115 is a great target. We can see on the Bookmap, there's a lot of sellers stacked up here, over 520,000 shares at that $115 area. So like I said, if we get that like 111, 112 break, I would definitely like target 115 as a first area to start to scale out at, or just a place to take profits. But either way, that's the setup. And shout out to Bookmap for the X-ray vision here with the 115 resistance.
520,000 shares is quite the sell wall. So yeah, I will definitely keep this one close on watch. And if you have not used Bookmap already, definitely check it out. It is more useful in a crazy market situation like we are in now than almost any other time. If you are interested, StockedUp viewers do save, but you have to use in the link in the description and the comments down below. If you use that link, a special offers icon will appear, and you can get some of the best deals possible with Bookmap. So definitely check that out, and shout out to Bookmap. You guys are great. And besides that, Tom, let's get right into today's momentum plays. And with the first one, we have UEC to the upside.
Yeah, nice uranium stock did very well on Friday. If they break out above $4.75, keep watching them up. They moved up over 6%.
All right, with the next one, we have Chewy, also to the upside.
Good old Chewy. We're looking at them again. It's been a little while, though. If they end up breaking out above 35, watch them to the upside. They were starting to break Wednesday's resistance, which was awesome.
Sounds good. And then with the last one, we have ARM to the downside.
Yeah, a lot of these tech stocks have been holding key bases in the short term. ARM is right around $100. So if they pull back under that, then watch them to the downside.
Sounds good. So we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. Trade smart, have stop losses, follow the money, and have a thesis for every trade that you take. Don't hold and hope, and prioritize smart, long-term oriented trading habits above all else, especially in this market. So good stuff there, Tom. And besides that, let's jump right into today's $510,000 big money trade, and we are looking at ticker symbol LCID, Lucid Motors. On Friday, the big money bought the $2.50 strike call options that expire on May 16th of 2025. This is a $510,000 trade where the big money is looking to profit if LCID makes a large move higher. Looking at Lucid in the short term, I'll tell you, Tom, it has held up a lot better than I was expecting with this recent downturn, and certainly a lot better than most stocks. It's bouncing off of a crucial support at $2 per share. This stock certainly is a high-risk, high-reward play, where not only does this company have a lot of work that it needs to do, but the stock also has to pick up some major momentum if it does want to have a shot at ripping to the upside. Looking at this option, I like how it's at the money. It's a short-term expiration, so the big money is expecting a move pretty soon here.
Yeah, this is a pretty crazy setup with Lucid. I love that support you mentioned around $2, and recently it's been bouncing off of pretty key resistance as well, and I could see it actually breaking this resistance eventually. Now, it is kind of double topping on this resistance in the short term, especially if we go to like an hourly chart. You can like really see that double top maybe a little bit better here at the top here, but at the end of the day, I think the big money here would be looking for a good breakout of that and a good run to the upside. I could see it happening with the holds of support support. And it's interesting to see the big money trader get a little bit bullish on Lucid here. You know, it's kind of interesting to me because Lucid's just been so terrible over the past couple of years that it's hard to, you know, really look at that bull side run. But I do love the support, and I would bet that they're, you know, looking for some good movement to the upside in the short term here. And I know some of these EVs, like even Rivian, has been trying to hold its support as well.
Yeah, and one good thing with stocks like this one is we could see that Lucid has a very weak correlation to the S&P 500, which is definitely a great thing to see for a market situation like this one. And if someone was looking for like a higher degree of certainty with a setup like this, you know, there's no need to enter a trade like this immediately. There's nothing wrong with waiting to see, you know, this stock actively move up first. And if that does happen, it'll give people a lot more confidence that the big money is, you know, not only, you know, buying to open these call options, but also that the setup is successful. And, you know, there's certainly a lot of opportunity getting in, you know, a little bit later as well. So definitely keep that in mind and keep Lucid close on watch.
Yeah, it's kind of a riskier stock, and at the end of the day, it could get some crazy movement, though. Like, whenever it trends, it really gets some trends going. I really liked the last time it bounced off that $2 support, and it got all the way up to $3.60 a couple weeks later. So I'm not saying it's going to do that again, but that's definitely something to keep in mind here with Lucid. You know, if we do start to see that break happen, it could be pretty inviting here, and it's a very short-term play.
Definitely. And on a quick side note, if you guys are new to the channel, first of all, welcome. But second of all, consider obliterating that subscribe button if you'd like to get our videos recommended to you more often. Every single day, we do hours worth of research, finding the best charts, information, big money trades, earning setups, and everything you have to know about the market. And we cover it in like 20 to 25 minutes or less, depending on how much information there is. We post all the time. And again, if you like our videos, definitely consider obliterating that subscribe button to get them recommended to you more often. But we also have to give a giant shout out to today's member of the day, Zane S in the Profits channel, who crushed it on Friday. He did great with Hood and the S&P 500 just index overall trading. It looks like a little bit over $4,000 in gains. Huge shout out to you, Zane, and keep up the great work going forward. I have a feeling there should be some pretty solid trading opportunities this week in multiple different senses, not only with the S&P 500, but also with individual stocks, precious metals like we mentioned, and whatever else develops as the week goes on. Thank you all so much for watching. And again, if you've never traded with Bookmap, definitely check it out. Now's a great time to try it, and you do save a lot if you use the link in the description and in the comments down below. It's like X-ray vision for the stock market, and you can see exactly where buyers and sellers are lined up. Thank you all so much for watching, and let's crush it in the market this week.